Hey guys, welcome to another episode of the Texas Blockcast. I'm here with J.K. Walker, Regional President and Managing Director for Innovation at Third Coast Bank, longtime member of the TBC. We're going to be talking about finance, macroeconomics, banking. But first, I want to recognize that we're sitting on the 53rd floor of a beautiful building with a great view behind us.
This in your office?
I wish.
It's very nice.
It is very nice. So shout out to Mainstay Digital in partnership with Market Scale. They've got a great space up here, and we're glad to be filming. JK, thanks for joining me.
Yeah, thanks for having me. Glad to be here.
Well, beyond your title, you've been in banking for a while. You've seen some of the different banking crises come and go. You were telling me before the show that you started out in banking during the oil and gas banking crisis in the late 80s.
Yeah, I did. You know, that's the
year I was born too.
Was it? Yeah, no, I was like, was anybody alive then? But yeah, it was 86, and went to work for a savings and loan doing SBA loans, which were considered a secure type, lending back in that day in the troubled times. But I mean, every bank in Texas during that next 3 to 4 years was really under pressure from the examiners, and you got all those great new regulatory oversight terminology like the Texas rule and things like that, which applies to all banking now. So, but thankfully we survived and got better every year.
And then we moved forward to another crisis, 2008.
Yeah.
When Third Coast Bank is formed.
Yep. Third Coast happened to be formed in the same time we were having the financial crisis. And I think, made movies about all this great stuff. But, it gave, the bank a little bit of a challenge getting started in that kind of environment. But, it had a good basis here in Texas. And every year since has grown, from its early foundation to now we're over $4.5 billion. So
it's a huge growth story, and it sort of paralleled the Texas miracle, if you will. A lot of business coming in here to Texas, companies moving from California, but also a lot of just innovation and growth. I saw a stat the other day that Texas is just under a quarter of the national GDP is generated here. And it just blew my mind because we only have 10% of the population. I think it's probably our export markets that really do that for us.
Right.
And you guys have been alongside this journey the last several decades. Branches across the state, I know, Houston.
Yeah, in Humble, Texas, and a big presence in Houston.
Yeah.
We call it the Triangle. So we have banks, in Houston, DFW, Austin, and San Antonio. And of course, we have some other small towns too, but that's really the big Texas Triangle.
Essentially where Southwest created its business model.
Yeah. Exactly.
They're the back of the napkin, Texas Triangle.
That's exactly right.
And I'll get this stat wrong, but there is a insane figure of the number of people in GDP in the Texas Triangle. Something like 80% of Texans live in the Texas Triangle or within that, small portion of the geography, even though the rest of the state is much more spacious.
Yeah, and even in particular, the DFW market has seen more, influx and in-state migration, to this area from both coasts just because of the opportunity here. And I guess the overall Texas attitude towards business. And we really are a can-do environment, and, that attracts a lot of people. So I think, just what you see in all the growth in the real estate, et cetera, around our market, there are metrics that fit each demographic. And as you continue to see more people moving here, the demand for housing, retail space, all these different things continues. And so where you had, some of the major, suburbs back in the day, now you're seeing new suburbs becoming bigger and bigger, like Allen and McKinney and Prosper, and those sort of places are really just, enjoying great growth.
Yeah. Well, tell us, before you came to Third Coast, what were you doing in the banking world? Well,
I was a regional president for Prosperity Bank, and I served in that role for North Texas for about 16 years, and then made the transfer over to Third Coast in 2017.
And was part of that transfer around the idea that Third Coast is just willing to be more innovative and work sort of more in that fintech way, a little bit more flexible and nimble?
I would tell you that, Third Coast Bank has always kind of punched above its weight class and done some things that smaller banks just really haven't done that are the same size. And so what we find in our customer base is we typically have a little bit larger customer in terms of loan size, deposit size. Perhaps their needs are a little more sophisticated, where we feel like we're competing with, bigger banks than our typical market. So, as we've talked about before, we have all your normal lending capabilities. We are a preferred SBA lender, but we also have, independent, capabilities like factoring. We have our own factoring group. Now we have our specialty lending group, which does, home building all over the country. And we also have our corporate lending group, which is has a national presence, in larger credits and things like that. But, most importantly, we have a very good, commercial lending type environment, good community support. And, that was really attractive to me.
Yeah. And you've come in and you're regional president for this part of Texas.
Yeah, for North Texas.
For North Texas. And then the managing director of your innovation division. What does that entail exactly?
Okay, so that was a role that they asked me to take on a couple of years ago. And then after, 30 plus years in commercial lending, trying to balance some of the expectations of customers that we have and the changing demographics to better suit and fit some of the needs they have from a technology standpoint. And, we are all used to dealing with, the mainstay companies here, but there's new generations coming with new expectations. And so as we continue to work on, being the best in providing services and things like that, we also know that there's a competitive landscape on the technology side that we need to address.
Mm-hmm. Now, as we see sort of this change in the way, let's start kind of macro. We've seen, tremendous amounts of volume go into stable coins, which is obviously one of the initial killer apps for blockchain. Those stable coins are built on all sorts of different layer ones, but, Ethereum, Solana, et cetera.
Right.
And if I'm going to get this right, I have to give credit to Nick Carter for this, the 15th largest buyer of U.S. Treasuries, if stablecoins were a country. Stablecoins buy more U.S. Treasuries than Saudi Arabia. So just from like a macro perspective, with over now $100 billion in stablecoins, I think we're probably close to 150 at this point. What is, your outlook as far as like innovation and growth and sort of this new digital economy?
That's really a great question. And I think the interesting thing how stablecoins have overlapped into traditional banking is people looking for, more instantaneous, fast payment solutions, secure payment solutions. And so, a lot of the fintechs have played in this world and created some really interesting solutions. And it's something that is, impacting the banking market just because the expectation to, evolve and advance on the technological side. And so, what we're seeing is, banks paying a lot of attention to what's going on in blockchain, and it is not going away. People have questions about, cryptocurrencies and things like that, but blockchain is a technology and a capability on, the technology side, has been proven is continuing to be built out in a lot of different ways. And so it seems like, just about every real-time, payment solution you're seeing from fintechs has something to do with sort of stable coins, and some sort of, wallet exchange capability.
Well, speaking of real time, you're talking about faster payments. FedNow is on the horizon.
Right.
People are examining it, trying to assess whether or not they're going to jump in or not. What are some of the metrics that people are looking at, or how are people analyzing FedNow? And maybe for the audience, what is FedNow?
Well, FedNow is the instantaneous payment solution that the Fed has rolled out, and you've got a number of banks. I think some probably in the 100 range of total banks in the test market right now, who are testing the receiving and sending instantaneous payments through FedNow. And there are some limitations on what you can do and how you do it. But I think the ultimate, goal from the tech savvy world we live in and a faster, better, all that kind of thing, mentality, people are looking for safer, faster, more secure ways to handle transactions. And I think everybody's aware of, fraud on debit cards and check frauds and all these different things are happening. But, going faster doesn't always seem real appealing to bankers. You want to make sure you're doing things the right way. You want to make sure from a compliance standpoint, you've got all the pieces of the puzzle correct. And, the compliance piece of the whole environment in banking is becoming more and more challenging because you have more and more clever criminals and, they're able to infiltrate systems. And so, between check fraud, ACH fraud, and all these different issues that we run into, a lot of banks are trying to slow down and make sure we have those bases covered before we speed everything up. Mm-hmm. So to your point, from a technology standpoint, I think it's on everybody's agenda in the banking world to get to that point and understand it and do it in a way that makes sense and it's manageable.
Yeah, and there's some people in the digital asset world that are skeptical of FedNow because they think that it's a sort of a slippery slope towards a central bank digital currency. I push back on those views a little bit, though, just because, or a lot actually, because there are no structural changes to the amount of data that the federal government receives from FedNow versus ACH. From what I can tell, I could be proven wrong, but there's no change in the travel rule. There's no change in, other than what was changed a few years ago, there's no change in the suspicious activity reporting. You're essentially not providing more information, still intermediated by banks.
Right.
So in my view, it's not a backdoor to a central bank digital currency. Yeah. Now, we do have to worry about a central bank digital currency. I think that's, a unique area where big banks, regional banks, local banks, and people in the digital asset world, even the ultra-libertarian digital asset folks, pretty much all tend to agree that getting rid of an intermediated layer between the Fed and the consumer is a scary thought.
Yeah.
And so from a privacy perspective, people are pretty against central bank digital currencies, and I know the banking associations are as well.
Yeah, and I think what everybody needs to understand is whether it's RTP, which was an early entrant in real-time payments, and FedNow, is it takes complete adoption for the system to work effectively. So you've got 100 or so banks that are in the test mode. Some, I guess, are active now, but you need the entire system to be in the network for it to be a ubiquitous service capability.
Yeah.
So right now you have a lot of big banks trying it. You have some innovative banks out there, working on some custom solutions and just different things like that in that realm. But I think people are trying to find use cases. What's a reasonable use case, and what is a risk tolerant type environment to play that game in right now.
Yeah. Yeah. And I certainly don't see it as a competitor to, more decentralized payment rails. I mean, we want the dollar to remain the world's reserve currency for as long as it can.
Yeah.
There's some macro headwinds. Bridgewater, the founder of Bridgewater, his name always escapes me, but he wrote this book about the changing world order, called The Changing World Order. It was about world reserve currencies and how nations rise and fall. And Kelly may be able to throw me the name of the guy, Ray Dalio. So Ray Dalio writes this book and essentially saying, the U.S. dollar is on a trajectory to lose its reserve currency status, and that's concerning. I think should be concerning for all of us, from financial security, national security perspective.
I think so for sure.
We got to get the federal government to start being a little bit more cost conscious with their monetary and fiscal policy. One day, right?
Yeah,
we can hope. Yeah. Well, tell me a little bit more about, all of this activity leads to, at the end, you have a user, or not a user, a client, someone who's banking with you.
Right.
How has it been working with payments companies, working with fintechs, working with digital asset companies? They're not your typical, big institutional company. Some of them are startups, some of them are well-established, but they're just unique opportunities and unique challenges.
Yeah. And that's a really good point. Talking about not dealing with giant companies, ones that need like a smaller, case study or solution for a particular market segment that they're going after. From a regulatory standpoint and a compliance standpoint, the challenges there are KYC, KYB, all these different things, BSA, all the challenges you run into with moving money around without knowing who your money, where it's coming from and where it's going. And that challenge is, as you probably are aware, has created a lot of consent orders with banks that are involved in that, finding themselves in challenging positions from a regulatory standpoint. And I think part of it right now that we're going through, whether it's, advances on the cryptocurrency type activity, blockchain activity, to just regular fintech activity, is that the technological capabilities that we have today, with the databases that we have to work with the real-time speed that we have with these huge data centers and everything else, is going so fast and has so much power that it's kind of surpassed the regulatory environment that was created to help control it all. And so you have catching up to do on the regulatory side and the banker's side to make sure they understand, what all the risks are. And the technology, as great as it is and as innovative as things are becoming in movement of money and how you manage those things, it is also creating a tremendous amount of risk in some banking circles. And of course, we saw, just an unintended risk of some of the banks that failed. Those were concentrations of certain types of customers in a small bucket with big dollar amounts, with large, uninsured deposits and things like that. And the fact that the news got out quickly and people were able to access their funds quickly drained those banks very quickly. And that's technology that didn't used to be available and didn't have the capabilities of that. So, you've got to make sure, in the banking world that you don't have, unsustainable risk in one certain market segment. Sure. You got to make sure you have diversity in your portfolios and making sure that, you've got the bases covered on, how money moves in and out of your bank and at what pace.
Yeah. And a lot of interest rate risk, I was told, or I guess I read from those banks that fail, like SVB, just weren't prepared for the rate rises that crushed the bonds that they... Well,
it was all the mark to market, you had to take, and which created, paper losses immediately.
Yeah, so the bonds are having to be marked to market, you're saying, yeah. And there's some, I was reading also about some penalties that Bank of America was having to pay as a result of marking or failing to mark to market some of their bond investments. So it's not just affecting regional banks.
It's affecting all banks that were kind of in that particular scenario with concentration in bonds and things like that. And that's not, every bank's not like that, and when those things, came to light and there were some concerns about runs on banks and things like that. I mean, we immediately talked to our customer base, told them the options that they had. We don't have a whole lot of customers that have, hundreds of millions of dollars in one account. I mean, we have good diversification in our portfolios, but it's a matter of being able to communicate with your customers, which, a really big bank is going to have a hard time doing.
Yeah. So I can't tell you the last time I communicated with, a banker for my personal banking. Now we use smaller banks. In fact, we used Third Coast for one of our foundations, and we use another small regional bank for some of our other banking activity. And I call the banker that I know there, the vice president level person, I can call them up. That would never happen at a big bank.
Yeah. Well, it's interesting just the difference in banking environments. And, I think we've talked about before, just the value of the independent banks and what they bring to the table. And, going back to the PPP loans with that last crisis that we had, the banks that really helped their customers were the independent banks. And, a bank like Third Coast Bank, we actually doubled in size through that process, which was interesting. We just had so many opportunities to help customers.
And you have now a lot of clients nationally because of that, right? Because you had clients coming in.
Well, it uniquely for us, we felt, the word got out, we were helping customers with PPP, and it spread to, we ended up doing loans in 21 states, which was really cool. Now, our national presence is more on our larger lending arms and things like that. Our verticals for, commercial banking, corporate banking, and specialty lending. But in general, I mean, we still have some good customers from out of state who stayed loyal just because we were able to help
as a result of that,
which was very cool.
Yeah. Well, it's a good story. It's an American story. I mean, kind of a time of crisis. Yeah. And they weren't being served by, whoever was their previous bank. So
well, it's just important to have a banker and somebody if you're in business and you own a business, you need to know your banker. Yeah. And that makes a big difference for you.
Yeah, it does. Well, I know there's a lot of digital asset companies that are grateful for their relationship with you guys. There's a lot of just impact that you've had over the last couple of years in your chair and kind of what you've seen at Third Coast the last, I'm thinking 4 years since the pandemic. What are you looking out on the horizon? What's the most exciting, most impactful thing for you guys in the future?
Well, I mean, I think, just from the standpoint of, banking opportunities and capabilities here, I think, Texas is blockchain friendly, and we feel like there's going to be evolution and growth there. We feel like, a lot of great talent is here, and even more is moving here to continue to promote the state as a leader in a lot of different ways on the technology front. And so we're excited about that opportunity. And, as the state grows and the markets we serve grow, hopefully we're doing the right kind of job to make sure, we're growing with it and, taking care of those opportunities.
Well, the speed at which you guys have grown is also, I think, indicative of just the willingness that your team has and jumping into opportunities. And of course, the phrase jumping into is not a very banking phrase. Examining, assessing risk, and being willing to just learn new markets and learn about new opportunities.
And I think that's a great point. Like we talked about earlier, we do a lot of things that may be a little bit more leading edge than some of our competitors. And we also try to do it in a very conservative way. So I would say, in the time I've been here, part of the bank, as we've grown rapidly, the quality of our assets have grown. Our overall portfolio qualities have improved. And we've just, we're blessed with a really good customer base. And, that's one of the things you want to have in your banking relationship is stability and knowing that you have, somebody you can turn to and be there and, for the long term for you, with the same kind of attitude and not change, as you move forward. And, we're in a more difficult market right now than we were last year, possibly before rates started, climbing. But, the fact that we've got good relationships really makes a difference in how we can solve problems, help, see problems before they occur and kind of have those conversations. And, so I think from that standpoint, it's been really good to be part of this bank and watch how the overall attitude is very much customer first and trying to figure out those solutions.
Well, you said it, long time horizons, long-term relationships. That's a good formula to build a good business. So, JK, thanks for coming on the podcast.
Well, thanks for having me, Lee. It's great to be here.
Where can people go to find out more about you and about Third Coast?
Well, you can also always go to our website at Third Coast Bank, thirdcoast.bank. We just updated our website.
New domain.
Yeah, new domain. Yeah.
There you go.
And, we've got a great website. You can find out what's going on in the markets in different places, how we're involved in the community and different things. So, of course, always welcome calls from anybody directly. So,
awesome. Thanks, JK.
All right. Well, thank you.